The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. And the first chart that we posted into Tiger TV today is a chart from one of our friends from Germany. And he's basically going back to 2000 and looking at this long-term weekly cycle that we've been watching in the Dow Jones Industrial Average. We've been 25 weeks up during the market from 2009 to 2011, and then since 2011 we've been up another 25 weeks, completing the big ABCD pattern up here at the 16,000 level in the Dow Jones. We'll have a pretty good idea of whether this is going to work, I would imagine, in the next few days or weeks, because it seems to be that the market is beginning to look like it wants to roll over a little bit, if nothing else. So that's one of the major things that I've been watching for quite some time now. One of our friends sent us a really interesting chart from my friend Tom DeMark, who lives up in Scottsdale, Arizona, not too far from where I am here in Tucson. And Tom used to work with Paul Tudor Jones. They did a lot of correlation studies. And as you can see, I posted in the one that has been on the internet quite a bit. I received this thing from about 4 or 5 different people. But it basically shows the correlation of what the market was doing in 1929, and then it's overlaid what's happened to the market right now. And folks, if you believe in pattern recognition and history, you ought to pay pretty close attention to this correlation, because it's right now it's probably running close to 85 to 90%. So it's going to be interesting. Now, whether we're going to have a crash scenario or not, I'm not sure, because every market is usually different. But most of the people weren't trading 26 years ago when we had the big one in 26 and a half years already. Many of you folks were not trading when we had the big crash of 1987, and God, I hope we don't have another one, because it's not fun to live through just because of the unknowns that are there. But my feeling on this is they're saying that it's different this time, and not only is it not different, it's going to be very similar to what's happened in the past. History does repeat itself. It's just a matter of time, and we're starting to see some rollover in some of these things, so we're getting a pretty good idea of where we stand. Now, one of the markets that we follow, on a long-term basis, we don't do any day trading with it, but it's the stock of the New York, the Nikkei Dow, and with the Japanese stock market. I'm going to put that into Tiger TV here to let you folks look at it so you can see what it looks like, because you'll see that there's a very strong correlation between the dollar-yen cross rate and the actual price of what's happening. As you can see, we've had a pretty major turn down in both of these, both the currency and the Nikkei Dow, over the past few days, with the dollar-yen is actually leading the way quite a bit. And so this is telling us that we're starting to see some weakness coming in to the Japanese market. Now, the correlation on this particular cross rate versus the Nikkei Dow is running at about just under 90%. You don't find it much higher than that, folks. That's a very, very high correlation. So we're assuming that the dollar is going to be losing to the yen here, and that the Nikkei Dow is going to be selling off, over the next few weeks. That's what the pattern is suggesting for what we're looking at right now. If you have any questions, it's 877-927-6648, and I'll be happy to to let you know or answer any questions I can. There's one thing that's really quite unusual this month, and that is that we had the new moon on December the 31st, and our full moon is not due until the 16th of December. Let's try again. Let's try the 16th of January. Folks, that's 17 days in a 28-day cycle. Something's really skewed with the lunar cycle this month. I meant to call Arch Crawford yesterday and ask him why there were 3 extra days between the full moon, the new moon, and the full moon, and I wasn't able to reach him. So I'll try to get in touch with him to see if I can find out that answer for us, and I'll have the answer for us on Wednesday. But I looked all through my astrology stuff, and I had not found this before, and I double-checked it, and the full moon is due on the 16th, is what my 10-year declination ephemeris tells me, and I've been using it for quite a few years, so it should be correct. We topped on the new moon of December the 31st, and then we sold off, and then we rallied back to a 61% retracement in the New York Stock Exchange Index, and also the NASDAQ, but the S&P has not made that level as of yet, but it certainly could. It's still relatively early in the move. I've had a challenge with the computer again. I've been having I've had a new computer put in, and trying to rebuild some of these programs around it has been a total nightmare for me, because I am not a not a tech person, so it makes it kind of tough. Now, someone asked to take a look at the IBB, which is the biotech index, the ETF for the biotech index, and I focused on that one in my newsletter this week because it had a really interesting pattern, and I wanted to mention one other one to you. In fact, it gapped up again today, and it's right there, boy. If it closes in the lower part of that range today, that would leave a hammer that would really scare the heck out of me if I were a candlestick person. But let me put this up and we'll take a look at it. But it's up strongly today, and it's completing the third part of the ABCD pattern that's in here. Let me put that one in, and we'll take a look at that one also. You'll see that it's finishing that one also. So this is going to be really interesting, especially if you have some really good volume today with this. But this has been in a pretty good up move. Now remember, we have shattered the highs from the December 2nd by quite a bit, and we've gone up another 10% in this. So this is not unusual when markets start to run like they have. I mean, that's not unusual to see this happen. Now, I wanted to point out one other thing, and this was also in my newsletter, and that's about the junk bond market, because we are looking at a market that compared to the, I'm going to put them both up here so you can take a look at what's actually happened here between the junk bonds and the 30-year bonds. People are more interested in how much money they're going to receive on their yield than they are on the quality of the investment that they have, because junk bonds are exactly what they say they are. They are high yield or junk bonds. This is how Milken changed Drexel Burnham. He wrote his paper when he was at Wharton in the early 70s about high yield securities, and at that time interest rates were on their way to 16% for Treasury bonds, 13% for T-bills. He was in the right market at the right time, and people that couldn't raise money, these little companies that are not able to get money, were able to go to the junk bond market, and they were called high yield or junk bonds. They were called junk bonds for a long, long time, and then when Drexel came in, they changed the heading to a high yield bond. In fact, Milken really hated the moniker of being the junk bond king. He absolutely abhorred that, but that was the moniker that Wall Street had labeled him on. So that's history, but that's part of the history that I lived through, because I worked in the building that he owned. He ran the second, third, and fourth floors, and the retail part of Drexel was down on the first floor. But that was a fun part of my career, so I have to say that it was quite good. Now, we have a situation now where we've gapped up twice now in this junk bond market. We've actually done it again today. So anytime the market starts to move down from here is a place where it could be reversal from. So we want to watch that. If you trade junk bonds, which I don't, I love the Treasury bonds and the notes. Those are the ones that are really the fun ones to trade. But the ETF, they have a whole bunch of junk bonds in that, and that's what gives you the index, and it shows you that it's making new highs from several months ago where, the interest rates on the bonds have been down. So the yield on the bonds has been up because price has been down. And so people are buying junk. And right now it looks like the right thing to do. But history says that could be something to change, down the road. Whether that's going to be the case or not down the road, we'll have to wait and see. We've got the Dow Jones up about 30 points. S&P's down a bit. NASDAQ is about unchanged. So not too much is much happening across the board here. But I think we're going to see volatility start to increase here pretty soon, folks. I don't know how much longer it's going to be that way, but I wanted to post in here the VIX index. And if you'll give me a second here, I will... I'm on my laptop today because, like I said, I'm trying to get some of these. Just a second. I figured out a way to do this even better. If I can, there it is right here. There we go. We're okay now. There you go. So you don't panic, Larry. There's no big deal about this tech stuff. You just have to press the right buttons. Okay, and you can see that the long-term weekly chart on the VIX has been down, since for 3 years it's been going down consistently. But remember the time when it was trading at around 90 back in March of 90, because we're going to have one hell of a rally from here, folks, and it's going to scare some people. Why it's going to happen, I'm not sure. Maybe it won't. Maybe it is different this time. But frankly, history has told us that really doesn't happen very often, where history is actually different. Nothing ever repeats in the world or in the stock markets or in life in general. It's just one big circle after another. It's just truly amazing is what happens, but that's what it really is. And you have to learn the mistakes of your past, or you're going to repeat them again in the future. So, keep that in mind when you're looking at your trading history and stuff like that. Remember, trading is about making money. It's not being about right or wrong. And so if you make a prediction in something like I do, and if it's wrong, I'm not going to sit there and stand in front of it. I'll take a few shots at it, and then I'll look at something else. But, the bonds and gold have been, very good to us here over the past months. We haven't been involved on the long side of the stock market. We saw the buy down in October. But, factually, when I got to November 25th, I thought that was going to be it, and the market went a bit higher. Now, we're still near the same price that we were in the New York Stock Exchange Index, like we were on November 25th, but the other indices, the Dow Jones and, of course, the S&P and the NASDAQ, have gone to expansion numbers up to the 1.618. But none of this has changed yet. We'd have to get above 16,000. We've got a call from Chris in Milwaukee, but it's almost near break time. Chris, are you there?
Yes, I am.
Okay, I know we're going to take a break now. You stay with us, okay? And we'll talk about natural gas.
All right, thank you.
You bet.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're talking with Chris from Milwaukee, Wisconsin. Are you still with us, Chris?
Yes, I'm looking at the nat gas futures.
Yes, I posted that into Tiger TV. What was your question?
I just saw this nice gap up today, or this nice bounce, and I'm just wondering, on a daily, it's up to a 50% retracement on the Fibonacci, and I...
Yeah, it certainly did. We had a Gartley form, last Friday down at that 382 level, and this has had a huge move today, and we gapped up, as you mentioned, and we also were near the top end of that range right now, and with that gap and that wide bar right now to the upside, it looks to me like natural gas is going to at least attempt to take out the highs that we made in mid-December. That's what it looks like to me, around that 4.53 level. That's what it looks like from my point of view, because when they explode off of these 382 levels like this one did with the gap up, and so far it's been very strong all day today, up more than 10 cents, it's that's a very powerful move.
Okay, good. It's trading mid-range, and it's weekly, and just a little surprised to see that hard turn.
Well, I could see why it occurred. It closed pretty good on Friday, with the fact that it opened near the low and then turned around and, closed near the high of the day. And then when it gapped up today, that was another sign that 382 was actually a really good number from Friday. And so to me, it looks like it really wants to power. I mean, I really believe in, gaps and wide-ranging bars. And This one certainly looks like it's got all of those parameters there. I mean, it really does look quite bullish.
So you think it could get up near the top of that mid-December?
Oh, I think it could make that top area another, 10 cents higher without any trouble at all. Stop and think. We've gone to 17 cents, since Friday, and now we've got a closing near that. Well, it's not closed yet, but another hour or so it's going to close. It's going to look awfully good on the charts. If you look at it, you'll have a big gap and a long-ranging bar. That tells you that it's going higher. I mean, that's a screaming danger signal. If you want to be short, you don't want to fade that thing from the short side. That's for sure.
Sure. Okay. Well, thank you very much.
My pleasure, and I hope you warm up sometime before the 4th of July.
I'm a cross-country skier. I like the snow.
Oh, do you? Oh, my gosh. You must be in seventh heaven. We have some friends from Wisconsin that were visiting here in Arizona, and boy, were they enjoying the weather. It was only about 58 degrees, and they were at the swimming pool. Nobody in Arizona goes in the swimming pool when it's 58 degrees. That's for sure. Hey, thanks for calling in, Chris. I appreciate it.
Thanks for your help. Bye, Larry.
Okay, you bet. We got a call from our friend in Philadelphia. John, are you there?
I am, Larry. Thanks for taking the call, sir.
What can I do for you, my friend?
Larry, I'm calling about the euro. I know you trade this all week long, and you probably had trades on in the past couple of days. I wanted to ask your eyes, please, not on the short term, but if you see any evidence that for a larger move to begin soon, kind of over the intermediate term.
Do you mean on the move to the upside, John?
Well, either way, I'm wondering what you see.
I think, in fact, let me put this in here. I think it's, in fact, I was just looking at that, and you're right, I do trade the euro all the time. And one of the things that we've been watching, and I focused this in the newsletter, John, when we're going to come up to the break here, please stay with us because we're not going to be able to cover this in the next few minutes, okay? So just stay with me, but we'll start out with it. I posted into Tiger TV the euro going on the daily basis, and you'll see that it hits these 61% numbers quite a bit, and the ABCD patterns are there. And the number that we hit last night came in at 135.43. That was the low on Friday, which was just 10 pips off of the 61% retracement from the November low. So that tells me, John, that this bottom that happened on Friday is very, very important. Now, we've rallied 120 pips, which is a considerable amount in the euro in 2 days, and then we pulled back to a 61% retracement last night at that 136.40 level. So it went up 150, came back 100, which is your 61% retracement. So that's the parameter that I'm looking. John, I can tell you this. If we go below 135, I think you're going to see 130 in the euro. That's what it looks like to me.
Can you, Larry? I'm looking. Thank you on your daily chart posted.
John, we got to take a break here, John. Stay with us, and we'll go through this again. So hang on there, please.
Thank you.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we've got our friend from Philadelphia, Mr. Z, on. John, what was your second question about the euro?
So the question is, this currency has been kind of sideways choppy for an extended period of time. And my question is, as you look at the bigger picture, are there any clues that would lead you to believe that this kind of quiet, choppy, sideways sort of thing that's been going on for, a year now, will cease and some more significant move either up or down will occur? That's the question.
The only clue that I see is that if you look at the chart that I posted into Tiger TV, we're looking at declining tops going back to 2010 when it was up around the 160 level. That's when the dollar was down around 72. Mm-hmm. And we've hit 61% retracements again this year in October at the 138 level. We also tested it 3 weeks ago at the 138 level, right after one of those FOMC meetings.
Yep.
And now we've made the first big correction that's taken 2 weeks to come down to the 135.43 level. So the key that I'm watching is the 135 level. If we break below 135 in the euro, that's going to tell me that we're going to be heading down to probably the 130 level and maybe even more. Long term, and I think we should do this for our readers and listeners here at TFNN, we're going to put the long-term weekly in here, and you can see that the bias is really heavily weighted to the downside. I mean, it's been in a long-term downtrend line that's been nearly perfect since 2008. And it looks to me like we're ready to move to the downside, because we've been in a rally since July of 2012. So we've rallied 18 months. That's been the longest rally that we've had, but it's not exceeded the 50% level of any particular high. So that's
right.
telling you that the thing is looking very weak. You should know weakness, my friend, because you were nailing corn to the wall all the way down, and that was absolutely the right thing to do, because the trend in this thing in the euro was down, the trend in the corn was down. So you follow the trend. You have to follow the trend to be your friend, I guess.
Larry, back in the days, of course, you were in Chicago trading for
myself.
The number of people I think I remember you saying back 82 to 88 or thereabouts. My question, you got to know personally Stottlemyre with market profiling and what have you, or no?
I met him. And I attended one of his meetings, and I had lunch with him and a couple other fellows, but I was not a friend of his. I mean, I was an acquaintance. I knew who he was. Whether he knew who I was or not, I don't know. I hadn't written any books at that time. But I did know of him and know who he was, but we were not associates or any personal day-to-day contact or anything like that. There was nothing that I knew about him.
Gotcha. Thank you.
Now,
the reason I asked the question,
with,
one of the people that Tom O'Brien and TFNN had introduced to our audience is John Logan, who runs something, and it's right on the TFNN website. It's called TAS Signal Box. Mm-hmm. And John had taken Stottlemyre's work on market profiles and done lots of work to identify trading tools or signal tools. And I've been watching his work as applied to the euro currency, especially keeping in mind the features on that weekly long-term chart you've just identified. And it's interesting, the work on market profile suggests resistance at the 136.80 to 137 level. And I can't help but think that this decline that occurred, for 2 weeks with the subsequent bounce is, in fact, just an ideal low-risk, high-opportunity short sale. So I just wanted to share that with you and where that came from.
Well, I think that's wonderful that you bring this up, John, because I really respected Stottlemyre's work with the way he worked with market distribution and things, and I think folks that have an interest in that should go to TFNN and look at Logan's work, because it's well worth looking at. And the good part about it is it's totally different than any other technical approach you're going to be looking at, because he's looking at volume and time and distribution, and that's the steam that runs the engine. So if you can understand how that works, it's a big plus on your side.
And Larry, I can't help but think, you mentioned right off the top the what you see in U.S. stocks, and the fact that we're right at the highs, but we haven't taken out that that December 31st new moon Bradley turn date high. I can't help but think that things aren't set up for perhaps a decline in stocks that might be associated with some short covering in the dollar and a fall in that euro. So I guess we'll see.
That's true, and we might even see 2 down days in stocks this year. Not necessarily together, but there might be 2 down days before we finish the year. We started the year with 2 down days. Maybe we'll see 2 more down days before the end of the year comes up. But it's different this time. That's much we're absolutely sure of.
Just remember, Larry, it's a world for young men and women.
Oh boy, John, don't tell me this when I'm working with these computers, and they drive me crazy. But what bothers? I'm going to get on my soapbox, folks. So if you want to turn off the machine, you can. But this internet, it's got a lot of sinister stuff in it, folks. I mean, I'm watching the news about the hacking for Target and Neiman Marcus and Macy's and stuff like that. And my God, if they ever get into, and I'm sure they've already been into the Defense Department and the banking system and other things, but if they ever shut us down, I mean, that cyber terrorism would be worse than the not loss of life, but I imagine it would cause loss of life because people's income would dry up. But we're so dependent upon the internet now, and if somebody shuts it down, we're looking at something that we don't want to have to even think about how bad it could be. That's an outlier event that nobody wants to really think about. And I know they say that can't happen, but when you see it starting to happen to big companies that should have really strong security, it's a little bit scary. So that's
Larry,
my 2 cents worth. I'm off my soapbox.
I'll recommend something to you to have a more secure understanding as a foundation for where we've ended up technologically speaking. A great film, and it's entertaining, but it's instructive. I have to highly recommend. You've probably seen it. It's back from the 80s, maybe 1990. It's entitled Sneakers with Robert Redford.
Robert Redford, Sidney Poitier. I've probably seen it a dozen times.
You know the film. I just rewatched it this past weekend, and I said, my Lord, this tells you where the start of everything we see today, where it came from, where it started. And of course, that was fictional, but there's something about films in the United States that seems to be fact is fiction and fiction is fact. So I leave that with you.
Amen to that, my friend. Another one that I like, John, that I think that people haven't heard of this one, I'm sure, for many years because it was done in the 70s with Chris Christopherson and Jane Fonda, was Rollover.
Yes.
And that was a fabulous film about money moving around, and it's I think people think, well, you want to spend a rainy afternoon watching an absolute superior movie, Rollover is the one. So I would highly recommend. I think it was 1982 is when it came out. But
just remember,
it was a great
leave that
movie.
smartphone on while it's on the pillow beside you when you're sleeping.
Okay. All right. Thanks a lot
Larry.
for calling in. You bet. So it was really, and we get back to nostalgia, talking about old movies. I did happen to go see The Wolf of Wall Street, and they should have named it something other than about the story of Mr. Belfort himself, Justin Belfort himself, because that movie didn't have a whole lot to do with Wall Street from the point of view that I had seen in my 50 years of being around it. I was never involved in the high-end level of IPOs and stuff like that, but that was nothing like I've seen in all my years at Wall Street. And believe me, I was at a really premier firm with Drexel Burnham during the 70s and 80s, so I would have seen something like that if it was around. So who knows? But anyway, it's really the life story of Belfort, and I didn't particularly like the movie, but that's just me. Old people have a tendency to stick to their old values, and that's pretty much it. Now, the next thing that I wanted to mention to you folks is the bond market. I've talked about this at the beginning of the hour, is that the bond market is disassociating itself from the junk bonds. Junk bonds are going up just about every day. That means people are scrambling for yield. They're trying to get yield because the yields on the notes and the bonds are dropping, and so they want to be able to get a better yield. And what they're doing is they're sacrificing safety, and that's not a good time. But it's also happening at the time when the stock market is looking at record margin debt. And folks, if there's anything out there, I know bullish consensus is important because you get too many people bullish, it's only got one way to go. But the bullish consensus is as high as it was in 1999, 2000, 2008, and where we are right now. But the margin debt is the thing that scares me the most of anything, because that's how they spanked me back in 1974. And believe me, when people see it coming, Bernard Baruch said one of the greatest scams in Wall Street is to run some price up to an ungodly figure, and you'll get people to buy it all the way down. So remember what happened to some of these things. Apple looked really great at 700. Everybody was saying it was going to 850 and 1200, and maybe it'll go to 850 and 1200. But before it did that, it dropped in half. And when it's dropping in half, it's not very much fun, especially if you have leverage and they're going to be asking you for more money, and margin calls don't get answered very often, at least not effectively. That's not one of the smarter things that you can do in this business is to do something like that. That's not a smart thing to really look at. Now we got the Dow down about 65 points, the composites down about 12, S&P's down 8, and the NASDAQ is down just about 12 right now. So it's sold off a little bit since the market started. We've got crude oil is down about $0.50 on the day, and gold is up about $4. Gold needs to get above that 1260 level. We're going to talk about gold here next because I think that's one of the things that everybody really likes to keep an eye on here. And if you'll give me 1 second, I will get the chart out, and we should be in business right about now. And we are trading right at the 382 and 786 level. Give me a second here, folks, and we'll put this in here to Tiger TV and take a look at it, because we've been up for quite a few days since the bottom we were looking for occurred down at point D around that 1180 per ounce level. We've rallied about $70 per ounce, but it's been quiet and it's taken 8 days to do it. So we're due for a pullback in gold from these levels, but the 1200 level should be pretty strong support in the gold market. And of course, if it goes below the 1170, all bets are off. That means it's going to go a whole lot lower. But remember, you've got the whole world is no longer in love with gold. They were in love with it back when it was $1,932 an ounce back in September of 2012, but nobody likes it now. So the pattern is actually pretty good in gold. The long-term pattern, we should take a look at that, because the long-term pattern is still, it's still in a long-term uptrend if you wanted to look at that, and it shows the nice little Gartley that we've got going on here right now. So we'll see if it's going to make this level, but it cannot go below that 1170 level. That's going to be very, very important that it does not break below that, because if it does that, that's telling us that we're looking at something that is quite sinister, and that it would not be moving to the upside if we break below those lows we made $50 or so before we started to rally. And the market rallying this much is not a big deal, because you're talking about just a 4% move, which isn't very much on something that's trading for $1,200. That's like a $44 move in Google. That's not a big deal. We have a question from our birthday boy from up in the Northwest. Marshall asked a question about the euro. Do I think it'll fill the gap on the daily chart? It probably will, because most gaps on charts are filled, and the euro is certainly the most actively traded thing in the world, and it most probably will take a look at that. So I actually love to watch the euro on an hourly chart, because it has swings of well over $1,200 to $1,300, and you don't see a $1,200 or $1,300 swing in the S&P when you're looking at it, and everybody thinks that's the best thing to trade. And the foreign currency, the yen and the euro, and the pound and the Canadian dollar, Australian dollar, all of those are far better to trade from a technical standpoint. We got the Dow down about 50, S&P down about 8.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back. We've got the Dow down 77, the composite down 15, S&P down 10, and the NASDAQ down about 15. Boy, when it started this show, the thing was unchanged, and now everything's down a little bit. We've had a request from Danny in Atlanta to talk about silver, and I posted into Tiger TV the chart on silver, the daily chart, and we came off of that bottom down around the $19 per ounce level about 8 days ago, and we got to the 382 retracement of the last high very, very quickly. That's usually a very, very positive sign, but we're a little bit overbought now, and today silver could not take out the highs of last week, whereas gold was able to do that. Gold did it on a spike of about $6 per ounce, and I happened to be watching that last night, and it was done with about 12 or 15 contracts, folks. I mean, I was watching the bid and ask, and it was so fast that I was actually shocked when I saw it. It went from 51 to 56, 1251 to 1256 on about 12 contracts, onesies and twosies, bada bing, bada boom, and it was all over, and then it sold off to the 1243 level. It's only $13, but you know, when you're watching it on a 5-minute chart, that's quite a bit. So silver is not taking out last week's high. The ideal situation now is to see silver back off to a 61% retracement that would take it down to around the $19.80 per ounce level, and I think that would be a place to look at it. I don't like to trade silver. it's considered the poor man's gold, and I should be trading it just because of that. But it's mainly has its pockets of illiquidity, and you don't want to deal with that without too much, without worrying about it too much, because it gets a little bit hairy, doing things like that. I wanted to. Oh shucks! I hope I have time to show this. I wanted to show this chart of where we were with the. Hold on a second. Yeah, this is it. Hold on one second. I wanted to show you why I thought that the Dow Jones was so weak today is because of the fact that it couldn't rally much. We've had lower tops ever since the high that we made back on December the 31st. That was the new moon, and the full moon is due on Wednesday or Thursday coming in here. So I'm assuming that we're going to be coming down into this low around Wednesday, Thursday, the 15th or 16th. Now remember, the price that the Basil was talking about is where the Dow is trading right now, 16,350. That's the price that he said if it closed below that he thought that it would have a capitulation to the downside. And he's one of the best technicians that I know, highly respected worldwide, and so we're right at that level now. That means we can't rally from here, but if we close below that level, then it would tell us that we're most probably getting ready to have a little bit more of a sell-off coming into the new moon and full moon that is coming in on the 16th. We started this show talking about Tom DeMark's forecast for a crash. Look at that chart really carefully, because crashes don't happen from tops, folks. Crashes happen after you have a good hard break with good volume and then a slight rally back that fails. That's when the crash will happen, because people are hoping that it's going to come back, and when it doesn't, that's when the panic sets in after a little bit of a rally, usually 2-3 days, going to a 382 retracement, and then it starts down quickly, and not slowly but quickly. I'm talking about several hundred points in the Dow in a matter of just a few hours. And I still stick by my prediction that sometime between now and March 31st, which is we got about 10 weeks, I think we're going to see a down move in the Dow of about 500 points in one day, because that is twice what the up moves were. We had 2 300-point up moves recently, and 1.618, that is 5. Live every day in an attitude of gratitude, and may God bless.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.